Brokers Alliance and the National Insurance Clearinghouse present the Business Insurance Zone, a Bravo video event. Broadcasting in HD 1080p on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, BrokersAlliance.com, and on Facebook, LinkedIn, Twitter, and the Insurance Forum. And now your host, the whiz of the biz, Steve Savant. Well, welcome everyone to the Business Insurance Zone, the talk show that spotlights insurance in your practice, keeps you up to speed on insurance news and products, features insurance strategies from top advisors. Get in the zone, the Business Insurance Zone. Our email is thebiz@brokersalliance.com, and you can call us at 1-800-290-7226, extension 147, for all your questions or quotes on life insurance, DI, LTC, annuities, or group pension plans. And of course, I just want to remind everybody that I'm not a tax or legal advisor. So if you hear any strategies on this show that you like and you want to move forward with them, always talk to your CPA or attorney first. And if you're with a broker dealer, always check in with your compliance department before moving forward with any of our strategies and tactics. Even though I think I'm totally street legal, I just want to make sure that you're all touching base. Today, we're talking about corporate DI insurance, disability. And with us today is Marcy Pruitt. Welcome to the show, Marcy.
Hello, thank you.
Marcy's the head of our disability department here at Brokers Alliance. And we had a show, we've done a complete show on individual. That was a great show because that really helped so many agents. It's not only education, but on our show, we make it entertaining. So we call it edutainment. It's a kind of a collage of the two words. Marcy, when we're talking about marketing to employers, right? I'm going in marketing employers. I want to know what is my front door issue. You know, in other words, I want to get in, I want to sell DI on a corporate level. I want to understand what it's like to carve out my execs. I want to know maybe, do they have a group plan? Am I going to need to punt because maybe people are not altogether healthy to go individual? Well, I need to get guaranteed issue or simplified issue. Talk a little bit about, give us a dip in the toe version of corporate DI.
Okay. Well, and I think depending what area of benefits or financial services you're in, you have a natural market. For example, if you are in the group health and ancillary lines and you've sold the group LTD, that is a natural opportunity market to go back in. There are always a top percent of the highly compensated that have reverse discrimination because the group LTD is a 60% to $6,000 taxable benefit, and the top people are making $200,000, $300,000. They're not at 60%; they're at 25%. Right there, you can go in, solve for the reverse discrimination, layer the individual on top of the group, and a number of things. You've taken care of the highly compensated employees. You have a product now that is not subject to a broker or record letter. You're fully vested in the product. So, by corralling that, top executive marketplace, you're really you're doing the right thing for your client, but you're also adding to your bottom line.
So if I'm hearing correctly, I don't want to extrapolate too far here, but in these scenarios, these group contracts kind of inadvertently cause a reverse discrimination on the highly compensated.
Right.
So they're down lower because of the numbers that they are, the caps. So the difference between the cap and what they might be able to get, what's the supplement? What kind of come in on individual DI in the corporate setting for execs under that scenario? What's the number I can get them up to?
We can get you up to 75 or 80%.
Now, is that 75 or 80% of my income on top of what I'm earning, or total all in?
Well, total all in, but
Okay.
it's also covering your total income, whereas the group contract may only be covering your salary. So if there's quite often for highly compensated, there's some form of variable compensation, incentive, commission, bonus, which usually is not covered under your LTD contract.
Would your deferred comp be covered under that?
Absolutely.
How
All
about
forms.
stock options that you exercise?
Stock options, no.
Okay, no. Okay.
You're pushing it.
I was pushing it. The elasticity of income to me is all in. Okay, so but I'm looking at deferred. What if I have a Christmas bonus at the end of the year? My bonus by performance, right?
Right.
Okay. I think all those and anything else that I really need to know that I can include in my calculation.
You can. So, anything to include from an employee standpoint, your 401k, your contribution plus your employer match, your, again, salary, bonus, commission, all total compensation.
So if my group is picking up 25%, I can add on another what, 50 then? About
You
somewhere
can
around there?
go up to 75% of your total compensation, or the cap of what the carrier is willing to sell. You know, so obviously someone making, again, $1 million would not be able to go to 75%.
Now, do most corporate employers then deduct that insurance on their rainmakers?
If they can, it can be done on a voluntary basis where the individuals elect to participate and it's payroll deduct, or the employer can pay for it, and it would be a taxable benefit if
To the employee.
to the employee, unless they grossed up their wages by the amount of the premium and/or taxes.
And can they do that?
They can, absolutely.
So
Section
when-
162.
Okay, so are we allowed, when we do a quote, when we're calling you for a quote, I need to know that gross up amount as well as the actual percentage, the 75%, because that it's going to matter whether they deduct it or not, or they're taking it pre-tax or not, right?
Right.
So that's an issue. And do we have is there a basic form that when we're in big corporate that will help me get through that?
Well, it's really just, there's a little fact finder, you know, because we want to know what the underlying LTD is, who pays for that. Like in a law firm, for example, the partners, it's always tax-free because it's passed through. So they ultimately are paying for it. So you know, the LTD, the caps, the limits, the taxation, and then who's paying for the individual DI.
And you have a form that would help us.
Yes.
Okay, again, if you want this form that kind of lays this out in a nice, easy to understand way of applying, just write Marcy at her email address, marcy@brokersalliance.com, or if you want to talk to her, as I often do, you can call her at 1-800-290-7226, extension 126. Well, now that I have my form, I filled it out, we've kind of looked at the tale of two cities. Should I take it pre-tax or by employer tax? We've got all that taken care of. Now I have to go through the underwriting process, just like the individual DI, if we were doing it outside, right?
You would, unless it's case by case. If there are 5 or more employees all purchasing the supplemental product, then that takes you into the guarantee issue world, where all of the underwriting is waived, pre-existing conditions can be waived, and the financials are waived.
As
The
little as
employer-
5 employees can
Yes.
waive the financial requirement, the physical, the physiology issues, the
Right.
exam, and pre-existing.
Correct.
So this would be huge for people who are really looking at this. If you could, but you've got to have 5 W-2 players for this.
Yeah, and they don't really have to be W-2.
Really?
Even 10, you know, and this is all a case by case. And because more goes into play, we look at, are you W-2, are you 1099, are you captive, are you an owner, you know, the taxation, the ages, the male-female mix, the occupation, the industry. So it's all that data is massaged, and then the carrier will say, will pass, or they'll make an offer. The more lives, the higher the amount of guarantee issue.
And in your experience, is the guaranteed issue more, multiple life? Is that a hot market to be into?
Absolutely, because the entire underwriting process is out the door. Deep discounts are applied, unisex ratings.
Okay, so you have unisex ratings, and you're going to get a list billing discount.
Correct.
Right? So you're getting a billing discount. You're getting waived finance and physical underwriting
Right.
requirements. I just want to make sure I get all of it, and the physical. All right. And so I'm looking at I got to have my minimum of 5, but if I get into bigger groups of execs, then the billing and all these areas are going to get steeper discounts because I'm conglomerating. I'm kind of consolidating.
Right.
Okay. And when you see DI today, when they do list billing like that, can it be paid by the month?
Absolutely. The list bill is typically paid monthly. You can do monthly, quarterly, semi-annual, annual, but it's typically list billed monthly.
So, in your experience, are these execs generally getting the company to pay for it so that it's deductible to the corp? And so if they did receive a claim, they'd have to pay taxes on it.
Well, we really suggest that they gross it up if the company's paying for it so that it can be tax-free, because especially in this scenario, their group is already taxable. The whole point of building on top of this is to get a higher income percentage replacement. The smaller groups tend to be corporate pay. Well, and years ago that wasn't the same scenario, but for the last couple years with just downsizing and unemployment. We unfortunately have not seen as many corporations paying for an executive benefit. Although corporations today, they're flush with money, and it's starting to loosen up. We're seeing a lot more opportunity out there for that. The larger the case, it tends to be voluntary.
In corporate DI, and I'm thinking of the bigger C corps, where I know we get the deduction. When you walk into a fairly large C corp, you're going to be able to leverage the listing, the bill listing discounts, the waiving of requirements. Nothing's going to get excluded. Right. When I get up to that level of disability, is it your experience that they already have other perks, and this is now a brand new one, or no, it exists already?
Now it's kind of a legally discriminatory one that can exist because there's so many other products that have the discrimination testing, and it's a lot of executive perks have been done away with. So this is something that they're unaware of.
So if I wanted to get into a corporation and say, I have something that I don't have, this is not ERISA then, right?
That there's not a letter ruling on that, but some carriers that have a group platform tend to lean towards the ERISA side, but you do not have to file the 5500s on this.
Of course, remember, we're not tax or legal advisors on our show, and always check in with your CPA and attorney and your broker-dealer compliance officer just to make sure anything that comes out of my mouth, for sure you want to check, and and Marcy as well. Because the reason I'm bringing this sounds like a good marketing opportunity to go in and bring a benefit that probably is not on the books, to really show this, we're able to pick up a difference in bring another benefit, and also I would say get the deduction and not worry about health exclusions or any of that.
Exactly.
I love all that. Well, listen, coming up in our next segment, we're going to continue our segment on corporate DI. We're going to drill down even more, talk a little bit more of the issues, the deductions, everything else. You remember, you can write Marcy at brokersalliance.com. Call her 1-800-290-7226, her extension 126, or hop out on our website, www.brokersalliance.com. You're listening to the Business Insurance Zone, the talk show that features insurance in your practice. We'll be right back after the break.
Steve Savant here. For years, I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and clients had to die to receive the benefits. That's the old term insurance. Now start selling the new term insurance. The term insurance that covers your client through a chronic illness, a catastrophic event, or a terminal diagnosis, and pays their monthly premium during extended periods of unemployment. What term life insurance can do all that? Western Reserve Alliance Advantage Term with living benefits. No other term insurance product bundles so many solutions to life's unexpected problems. And all in one policy. So for more information, call Brokers Alliance 1-800-290-7226. Stop selling the old term. Start selling the new.
Well, welcome back to the Business Insurance Zone, the talk show that focuses on insurance in your practice. I'm Steve Savant, your host, financial color commentator, and interviewer extraordinaire. In this segment, we're continuing with our discussion with the diva of disability, Marcy Pruitt from Brokers Alliance, ahead of our department on DI, and all that is DI is your domain. So we bow and salute your knowledge, and we're into corporate, and we talked in the first segment, excellent segment, I have to say, but I really want to kind of now start to drill down on a few other aspects: buy, sell, key person, and retirement, and how that all kind of integrates. Let's do first key person.
Okay. Well, key person, as it indicates, is a person that is so key to the organization and generates revenue that if they were to become disabled, it would create a problem for the employer.
I think that we should use myself as an example of that key person, whereas if I was not here, the company would suffer.
Right, and that's the product's been shelved by many carriers because we're all replaceable, Steve.
I know that in the general population that is
Yes,
true, but I
absolutely.
think I might know.
In your case, yes, the key person, similar to life insurance, and if then the person didn't die, but they became disabled, and it would create a revenue issue for the
Well, I always thought that
employer.
was I would get the disability income, but how does that help my employer?
Well, in the personal DI, you would, and that's why it's important to use the proper product, because if in a key person, the employer receives the monthly benefit. So if you are a key individual in the firm and you were to become disabled, the firm would then receive the monthly benefit to do with they please, to either hire, recruit, train someone to replace you.
And what percentage will they pick up of that person's base salary and comp?
It varies, but essentially it can be it's 80% of the income that was being paid to you, or you really now can almost design it for just a flat amount if they wanted to. And again, because it depends if you use the traditional market or if we go to Lloyd's, you can design almost anything you want. You can just say, I want $500,000. And
I love Lloyd's. They'll do anything.
yeah, it is kind of a factor of your income, and it depends if it's lump or if it's paid monthly. So there's a lot of variation, but the benefit can be paid out monthly to the employer, and then it's usually about 2 times your income, your monthly income. And then if you want a flat lump sum, that's where the 80%, and there's some other things that come into play.
So there's a huge distinction. I'm on a learning curve right now. The personal DI, the employee's receiving,
Right.
but this key person DI by the corp is really paying the employer.
Correct.
Now is that? And I'm assuming that the DI is that deductible on the key person then, as from the corporation point of view.
No, because the corp's the beneficiary.
So the corp can't write it off.
Well, they can write it off, but then it could create a taxable benefit to them.
Back to the corp.
Right. So you want it's usually not a deduction because the corp is the beneficiary of it.
Well, just remember, everyone, check out with your CPA or attorney to find out how they read on this, and of course, if you're the broker dealer, check with your compliance officer. Well, I want to talk a little bit about them, and that, I really like that because that was a distinction I didn't think I had my head around, and that's a great distinction. I want to talk a little bit about this retirement because this is the one that I got to say I did not know. Here I think I am the bastion of all font of insurance knowledge, and here I am not knowing this. Retirement and DI. How does that work? It sounds exciting.
Well, it's when you are healthy and working and putting money away in a qualified contribution plan, or for simplicity, any type of plan, exceptionally a defined benefit plan can be covered, but typically some kind of qualified contribution plan set by our KEO, 403B, 401k. But take your common 401k. When you're healthy and working, you're putting the money away, your employer's doing a percentage of a match, and you become disabled, well, that stops. You're not working, you're not collecting a paycheck, your employer's not matching that. And so hopefully you have an individual policy. That's not a requirement, but in any event, you're no longer putting money away for your nest egg. So a trust is set up where the predetermined amount of monthly benefit that you purchase, because it's an indemnity, so if you purchased $1,000 a month, or we basically take the IRS limits and divide that by 12, and you put that money is then put into a trust each month. You pick any investment direction you'd like, and the trust will spin off the 1099 each year to pay the tax on the capital gain. So that money gets invested month in, month out, and at 65 you draw that out as a tax-free disability benefit. It's not qualified money.
Because you paid your tax up front.
That's right, each year.
So this then in reverse, then conversely, could I use this for my 401k and other qualified plans?
Well, it's not qualified money. It's a disability benefit being paid into a trust each month.
Oh, I see. So the income is coming. They're not really linking the two.
They're not linked at all.
Gotcha,
So
okay.
your 401k plan through your employer is frozen, and you can let that sit there, or you can, depending on your situation, you can divest that under hardship rules, and so you may blow up or spend your nest egg. So that's why the importance of continuing.
This sounds like a
trend.
great key person. If I'm looking for perks for my employer, and hopefully he's listening to the show, this would be a great perk because I could, if I couldn't fund my retirement because I was disabled, I'd be getting my individual DI to pay for my normal domestic spending and
Right.
all those issues. Then I'd have this. I'm still putting money away.
Exactly, and the beauty of that is it can be a lifetime stream of income because your personal policy is going to run out at age 65 or 67, like we discussed. So what happens?
Or longer if your employer allows you to stay past 67.
Well, yes, if you're still working full time, then it usually goes to a 1, 2, 3 year benefit period. But
Okay.
but that's different. That's pre-disability. The policy benefit period still stops at age 67. A couple have at age 70, and 2 still sell a reduced lifetime. For the most part, most policies benefit terminates at age 67. When that happens, you're done. Is Social Security going to be there? Do you have a nest egg? Most likely not. So that's where this then kicks in, this pool of money that you've established in the trust.
I did not know that, and I think a lot of our viewers didn't realize it either. If you want to have, Marcy's got stuff on all this. If you want to write her, Marcy@brokersalliance.com, or call her toll free, 1-800-290-7226. Her extension is 126. And ask her about this. I think this is one of those things I could get into a corp, and actually, this is a thing I could sell.
Well, and if especially, again, we talked about the markets, if you're selling group LTD, if you're selling 401k plans, this is a great cross-selling, because are you selling the old kind or the new kind? Well, the old kind's when you're healthy and working, you're putting money away. The new kind is when you're healthy and working or sick or hurt, the money continues to be put away.
I like that because we in our commercial, you probably heard our commercial, it says, stop selling the old terms, start selling the new.
Right.
Now you're saying,
stop selling the old 401k way.
And start selling the new.
And the same rules apply if you have X amount of employees, typically 10 for this type of product, we can guarantee issue it. So the employer makes it available on a voluntary basis or corporate pay, and it can be guarantee issue.
Who are the players in this area?
Principal, Mass Mutual.
Mass Mutual, wow, okay. Big Blue. Anybody else that you kind of like?
A couple are coming out with it, but it's
We'll
not
see.
really.
We'll have to
Yeah,
wait.
Guardian
Guardian?
does, yeah.
Oh, yeah.
Guardian.
The venerable Guardian.
Principal, Guardian, Mass are the 3 that have had it and are.
And you guys are selling.
Have been selling, right?
Excellent.
And some others are trying to.
What about buy-sell? This buy-sell DI, I mean, I always think of life insurance buy-sell arrangements, stock redemption, cross-purchase,
Right.
wait-and-see trust. People have to die to make all this happen.
Right.
But what happens when one of my partners or one of our employers or shareholders, they become disabled?
Well,
Talk
it's-
about DI buyout. 'Cause
Right.
that's or actually buy-sell, yeah.
And it's really creates more havoc because under the same premise as life buy sell, you don't want to be in partnership with your ex-partner spouse. Okay, well, you don't want them, the disabled person, to sell to a competitor, to be a drain on the company. While you're healthy and working, everybody's on the same page. When somebody's disabled, they want to pull everything out of the business. So by having the term set forth prior to the disability, when everyone's healthy and happy and working together and growing the business, then the terms are set forth. So if they become disabled, they don't die, but you still want that disabled person out of the business. And
You say that so coldly.
well, that's the reality.
Okay.
And again, because their concept
Right.
and outlook on the whole business changes. They are not interested necessarily in growing it and putting money into it. They want money out of it. So, and the creditors may not look favorably on that. I mean, a lot of things come into play. But a great start to try to sell this is to go back and look at every one of your life buy-sell agreements and see if there's wording in that agreement about a disability that you've not funded.
Marcy, I have to say, of all my time, almost 30 years in this business, most of the buy-sells that we review for life insurance, whether it's
Right.
buy-sell, cross-purchase, stock redemption, or wait-and-see trust, almost all of the succession planning, almost all have very little documents, if at all. I'm kind of taken back how we've written the applications, but we didn't do the legal work to match up with the actual insurance that we bought. this is a huge issue. I mean, even if I can find a doc, hopefully you're telling me now, if they do have one, your next step of reviewing is make sure the attorney reviews if there's any disability provisions.
Right, and the disability carriers typically give you a year. We don't want to hold the sale up, so you can sell the policies, put them in force, and you have a year to go back and draw up the agreement, because the wording in the buy-sell contract must match the disability carrier's contract. The carrier's not going to do what your agreement says. The agreement has to do what the contract says.
So I'm
meaning
putting it in force
elimination.
first.
Yeah, put
putting
the policies
policy in force first. And I have up to 1 year
Right.
to get my document to match the carrier. And I'm
Right.
assuming the carrier then looks at it, signs off on it.
They don't even need to. They just need to enforce,
It's
because they'll
enforced.
rescind the policies if there's not a document in force after a year.
Okay, so they got a year to pull that off, but it's
Yeah.
after the fact.
It is after the fact, but again, they just want to make sure that they're going to be able to fund a viable document.
Well, I'm taken back by that. That's pretty. I love that idea, though. I mean, so on my buy sell, and would this work? Probably work with cross purchase as well too.
Absolutely.
My mechanics probably think.
Cross-sell, entity trust, any type of
Well,
setup.
I like all that ability to do that, because I always want to make sure I can go ahead and cover off. That's a strange area of business indemnification. I love that. I learned another thing today. I want to thank you for being my guest on my show today, Marcy. That was great.
Thank you.
You can write Marcy, of course, marcy@brokersalliance.com. You can call her toll free. I like to. 1-800-290-7226. Her extension's 126. And don't forget to visit us on our website at www.brokersalliance.com. I'm Steve Savant. You've been listening to the Business Insurance Network. Yeah, that's the buzz on the biz. Get into the zone, the insurance zone.
This has been a Bravo video event of the National Insurance Clearinghouse and Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. You can contact Brokers Alliance at brokersalliance.com or 1-800-290-7226, extension 147.